Hey, this is Matt from InvestiQuant. Today is Monday, March 22nd, 2021. This morning we saw the markets gap up and take off to the upside in the S&P. You also saw that in the NASDAQ. We've seen a little bit of divergence there with the Russell and early on with the Dow, but the S&P and the NASDAQ were pretty strong to the upside straight from the get-go this morning, and they've been trending higher. And what we're going to look at this afternoon is this type of trend activity taking place specifically on a Monday in a similar market environment. So let me hop into Discover and set this test up and take a look at the results. So I've selected all four instruments there. The entry is going to be based upon entering the market long at 3 p.m. Eastern Time. The exit will be set to the end of the session, which is 4:15 p.m. Eastern Time. Now, to describe this trend activity, I'm simply going to say that the open as of 3 p.m., the open for the session was in the bottom 25% of the range that's taken place between 9:30 a.m. Eastern Time and this 3 p.m. Eastern Time entry that we're looking at. And I'm going to say that the price at 3 p.m. is in the top 25% of the intraday range. So that creates a trend up like day that is forming there, where you're opening near the lows and at 3 p.m. you're trading near the highs of the session. Next, I'm going to go into the indicators section, put us in a similar market environment where we closed below a 10-day simple moving average on Friday, but above the 200-day simple moving average. So I've got those selected here. And then lastly, I'm going to hop into the calendars library, and I'm going to say that today is Monday. So I'm just going to hit equals here next to Monday. That'll add it to the test. And now I can click view results. And here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time. If you have a trend day forming at that time where you've opened in the bottom 25% of the range and you're trading in the top 25% of the range at 3 p.m., this is taking place specifically on a Monday in an environment where you closed above the 200 but below the 10. So historically, we've got 45 samples in the S&P for this pattern. We've got 38 for the NASDAQ, 42 for the Dow, and 44 for the Russell. And the win rates on them are kind of odd here. You're seeing the S&P and the Dow very similar there, with win rates around 35% for both of those, whereas the NASDAQ and the Russell are very similar as well, with win rates around 55% on those. So we've got four different markets here. Two of them are weak, two of them just slightly favored, depending on the one that you're looking at. So the S&P and the NASDAQ are the ones that are really shaping up this way, or showing these developments so far today, and they are disagreeing on what has happened historically with this pattern. So the S&P has been weaker, whereas the NASDAQ has been a little bit stronger. If we look at the average win and average loss, the S&P average loss is larger than the average win. For the NASDAQ, the average win is larger than the average loss. For the Dow, the average loss is larger than the average win, so that is just like the S&P. And then the Russell, similar to the NASDAQ, where the average win is a little bit larger than the average loss. So not sure why we see this split up pretty evenly, 2 and 2 here, with the S&P and the Dow being weak in this scenario and the NASDAQ and the Russell being strong, or at least stronger. They're not necessarily all that strong. But that's what the data is telling us. So that is what has happened historically. So hopefully you found this helpful. Good luck today. We'll see you next time.